What's up? What's up? What's up? Cosmic Training Academy. What's popping right now? Today is November 21st, 2023. We are looking at SPY. I have put on a SPY call. As you can see here, SPY call 451. Um, my position. Where is my pin at? I don't see it. Anyway, yes. If you can take a look, if you can see, I have put on a SPY call. The date is, I bought it today and expiring in 10 days. But obviously, I'm just watching SPY and I'm going to ride it for a little while and then I'm going to close it out for the day. I think it probably a $50 profit for the day. Just put this on probably about, well, the market's only been open for 36 minutes. Um, yeah, it's been on. This trade has been on for about 10 minutes, and so I saw that the moving average, which is one of my little indicators, is that I saw when the moving average was crossing over, and as you can see, it's crossing over again. Let me see here. I hate when Robinhood does that. It crossed over and started rising. So when I saw the red cross over the blue like that going upward and the chart was above, I knew that we probably was going to have some momentum. It tested, it retested, and it kept going back up. So I knew to jump in once the retest was coming, and it broke through. So that's what I got. So I'm just really looking to close it out because again, this is a $300 trade, give or take. So, oh, the value is full. I didn't realize the value was 400 something dollars. So, but you can see where I'm at, and like I said, I'm just watching to make sure it doesn't go too far down, real close like a hawk, because really I don't really want to take less than 30 at this point, but when it reaches 50, I want to go. So I'm just watching it. Once it gets below 35, let me see. We got a retest on it right now. Let's see here. It's gonna probably come back down. I hate when I can't see them. I hate when I can't see that. Well, see, I have another computer screen on that y'all can't see, but so I'm really watching it from the other screen as well. But I really hate when they do this. This doesn't even make sense. It's very frustrating. But anyway, I can still look at where I'm at. So you see 33. Now, what it's doing right now, this is what I knew was going to come down and do a retest. And the retest should be at about, really it should come lower than that. It really should come down to 451.98 for a real good retest. But I am going to, this is right here at this 30 right here at 452.04. 452.04 is the first retest, and if it bounce off of that, which it looks like it might bounce off of that and keep going up, I'm gonna be surprised because there wasn't a lot of room between the last resistance and this resistance, so it looked like it's losing momentum. Yeah, so that I'm gonna go ahead and go. Let me go to my option. See, I'm at 32. I'm gonna go ahead and go. So I'm gonna sell it at 408. They like it at 408. I love it at 408. I'm not even tripping. I don't care what it do after that. So as you can see, if this closes at 409, there it is, 408, 409. Okay, so I just got $409 back. I paid 378 to get in position on that. So that was my 379. See, so 379. If you can look down here, I don't know, guys. I don't know why I don't have my little pointer. It's just I don't know why it's doing that. Oh, tools. There it is. I forgot that it updated on this. So just to give you some perspective, November 20th, I bought one contract at $3.79 per option. Excuse me, per $3.79. So that equals 379 because we got 100 shares. Okay. Excuse me. And then I'm in Japan, so that's why you see this November 21st. It's not November 21st even yet for United States, but for me it's the next day already. So and it's just a quick turnaround, really, man. You know, I mean, I wish it showed the hours and minutes, but it doesn't. So really, this was like a 30-minute trade, I would say, maybe 20-minute trade or something like that. 20-minute, that's $30 in less than 30 minutes. So there you have it, guys. And it was just really to just bump my little account up and get the week started off. Oh, it just took off. Oh no, it's pulling back. Can't trust it. I know. Look. They're losing momentum, and I know that it wasn't. I know that it wasn't ready to go any further. Well, 417. That would have been another $10. 420. Look at this. Oh, it's still inching. And what I like to do is stop looking at shit like this because it'll just make you really like frustrated. So guys, that was that, and I just wanted you guys to know that that's what we did for the day. Now we're getting ready to go ahead and get into looking for some options. So on this account, I'm looking for weekly options. So let's start looking. I guess I'll give this video a little bit more time because the YouTube said that I should be doing no less than 8 to 10 minutes on my video. And a lot of times I'm not sure if you guys even like that. Make a comment down below if you liked the videos to be a little bit longer. I usually try to do short videos, but they sent me a thing saying that I should be doing my videos longer. So anyway, I have created a custom options screener right here, as you can see. It's my own little personal screener, and it kind of just gives me an idea as to of different stocks that I might want to look at. And you know, the good thing about this, you can, based on the account that you're trading out of, you can set the price for whatever you want to. So if you can see here in the price section, this is different prices. Just remember that whenever you're doing options, you're doing 100 of these. So if it's 29, it's 2,900. 25 is 2,500. So on and so forth. Okay, so just remember that. So if you got a $1,000 account, you might want to be down here trading something that's in the $10 or less. Excuse me. Because $10 or less would equal $1,000 option. Okay. You guys can't see what I'm seeing, but SPY is now falling. I knew it was coming because it was losing momentum and it was getting lower highs. The highs weren't getting as high. They weren't lower highs, but they weren't getting as high, and it was losing its momentum. And see, after years of trading, you start to realize that you know what's coming. Just from watching the chart long enough and you see the behavior of the chart, you know it's a problem. And you know it's time to go. And greed will get you every time. You just have to be willing. And just to give you an example, let me go see. I think we left SPY at 450 what? 450, I think it was when I got out at 452 221, something like that. Oh my goodness, guys. This thing does not want to show anything. Okay, 452.07. So it's lost and it's probably it's falling. So, yeah, that's that. So, see 452, see if you guys, I don't know if you see that. Ah, see 452 right there. I wish we could. I wish we can see back there. I don't know what the hell's going on. It does that on this thing. I don't know why. But yeah, so it was time to go. Um, and you just have to you have to learn that when it's time to go, don't play around, because at the end of the day, SPY doesn't have to keep going up. It could do whatever it wants to do. And so now it's at 452. See, 451.92. 451. See, I knew it was about to fall. 51.90. See, yeah. So the people who stayed long for this one, they getting burned right now and now they got to try to sell out because they stayed too long. That's dumb money. Don't be dumb money. Once you start seeing it resistant, and you start seeing that you having resistance, and you resistance twice, and you're not having long movements going upward, and you start seeing it's consolidating. Once you see that, it's time to get your ass out of there, man. If you're buying calls. If it's doing the opposite, and it started to consolidate, and you start to see it's not going as high, and you bought puts, then you might be ready to enter onto a put. Like right now, the only reason why I wouldn't enter a put right now is because I don't enter a put unless I see the 20 cross over the 50. I don't enter a put unless I see the 20 cross over the 50. Cross over the 50, and then excuse me, the 20, yeah, 20 cross over the 50, and then in a downward direction, and this chart has to be below the 20 and the 50. Do you follow me? Let me say that again. Let me show y'all example. So here's okay, well, no, that's not good. Let's see, maybe I catch it in 3 months. Yeah, something like that, but it's kind of far over there. Not a good illustration, but just to give you an example, right here, once 20 broke above the 20, yeah. Let's see. That's it right there. So anytime you see, well, I always wait to make sure that the chart, all of I really need to put I should put change it so that you can see candlesticks. Yeah. Okay. Now that might make it interesting to you guys. So now, then I'll bring it over here so you can get an idea of what I'm talking about. All right. Number one, choose what time frame you're choosing on. 1 week, 1 month, 3 months. So make your decision on that. Number two, how far are you? Where are your candlesticks at? Are they above or below the moving averages? I'm telling you, if they're above, you're only doing calls. If they're below, you're only doing puts. No exception. Don't try to be slick. Don't try to be smart. Don't see that it's right here and say, oh, I'm going to buy a put. It's probably going down. You don't know what it's going to do. You wait until it's below, and then you buy the puts. It must be below. and then you buy the puts. You see what I'm saying? It must be above, and then you buy calls. It got to be below the moving averages, and then you buy puts. You know what I'm saying? So don't try to be slick and try to think you're gonna get ahead of it and be here talking about you finna buy some calls. Yes, did it go all the way up right there, make somebody a whole ton of money? Yes, it did. But you don't know what it's gonna do. You know what I'm saying? So you can't even judge that. This is you never buy calls. You never buy calls here. You only buy calls here. You know what I'm saying? You leave this to institutional people who got a lot of money to lose. You know what I'm saying? Unless you got $1 million in your account and you don't mind losing 50, $60,000 on the trade, then obviously over time SPY will keep going up. That's what it's shown us. That's not a guarantee, but it has to take a fall at some point in time, and you never know. It may take that fall on you, and so you know, like I said, only buy when it's above the moving averages, and sell when it's below. Period. Okay. So now, how much time we got, guys? I don't even know. I don't even know how much time we got. But anyway, so that's that. Let's see. I'm trying to see. We got some interesting stuff. Let's see what gold's doing today. Now, the reason why I'm looking at this right now is because I want you guys to see that examples of what I might be looking for when I'm doing weekly options. So in this situation, gold is let's see on the weekly, daily. The 20 moving average is the red. The 50 moving average is the blue. I don't like that. I don't like that at all. No wonder I was kind of standoffish about that. Because normally I make the 20, the 50. I've usually that's fine. So anyway, the 50 is your concrete. I wonder if I could change that color to blue. I mean to black. It's done, but I just want to change the color. No, okay, that's why. Okay. Yeah, it won't let me change the color. So, yeah. So that's what it is. Anyway, so 50 and I look for the 20. Remember the 50 is your call the 50 your foundation. So what you're looking for is the 20 to be crossing up and down through the 50. That's what you're looking for. So the 50, call it your foundation. And there's the 20 right there. And here's the 50 right here, right? Okay? So what you want to be doing is you want to be watching the 50. You want to be watching the 20 crossing the end through, because once it does, here's an example. That's your 50 and here's your 20. What does it do? It's crossing through your 50, which means that once it crossed through going down, what is that? That's a sell. And then once everything is below, and your chart pattern is below the 50 and the 20, then you know you're in a sell mode. You don't try to do a buy. Don't try to do calls unless you're selling calls. But you don't buy calls with it in that position. Even when you see something like this, see how it's crossing over the 20 moving average right there? You don't do that. You wait for the 20 moving average to cross over the 50, not the chart pattern. You don't care what you don't care. Let me so this don't be confusing. You don't care what if these candlesticks must be in the right spot. If they below, then it's a sell. If they above, then it's a buy. When they talking about straight up, nakeds. So by naked I mean we ain't doing no, um, we're not doing any kind of spreads or anything like that. And we just doing straight buying calls or buying puts. That just means you put money down for it to go in that one direction. That's the simplest form of trading that you'll see most people doing options when they first get in. They just do buys. Very rarely do they do sales when they first get in because it gets confusing. So what they'll do is they think it's going down, they'll buy puts. They think it's going up, they'll buy calls. That's the easiest way to learn how to do trading options. It's just no different than a casino. I hate to say it, but that's a fact. If you're just gonna do all buys, then the only thing you do is you buy it calls if you think it's going up, and you buy puts if you think it's going down. Okay. So anyway, the question is, what do I think Dust is gonna do? Uh, which is a ETF for gold. I'm sorry. So I just want to see what Dust has got going on here, and see if we could find any kind of interesting options. Now, see, I love it because these are weekly options, and we can see if there's any money. $1,300. It's at $13, so that means for each contract it's gonna be about 1,300. Okay. So just keep that in mind, guys. Um, so if I think that Dust is going to, well, what I'm doing is the wheel. So we go to sales, and we sell puts because we're trying to get it for cheaper. So we're looking for where do we think it's gonna go down to. But this is the trick bag. It's not what you think it's gonna go down to. You think what it's not gonna make it to. But see, Dust is pulling a trick on you. See, it wants you to try to come. Here is what the price is right here. It wants you to come in here real close at 12.50 and get that $13, and you're gonna get that put in your pocket. That's going straight to your broker account, right? Okay, cool. But the reason why, look right below it. Right below that is the $12 one. And look how much they're going to give you for that $1. Nothing. But what's your chance of profit? 95% chance of profit. You see that? There's not even an in between here. They're not even going to offer you a $6 or $7 or $8, nothing. They go from 13 straight to $1. They know this is risky. It's talking about 77% chance of profit, but do you really want to take that chance? Let's see about your implied volatility. Not bad. Not bad. 56% implied volatility. Chance of profit is 77% chance that it will not reach that. It just depends on you. Me, I like it. It's really in my range, 75 and above. But what makes me really suspicious, and you see you got open interest of 107, so there's some people that's interested in it. The one thing I don't like is the spread. I like $1, $2, $3 spreads. That's a $4, $5 spread. That's one. Two, what I don't like is I don't like when I see that the very next option is at $1. It's basically worthless. That lets me know that everything hinging on this one, and which will means that big money often will come in and press through that price of 12.50, taking everybody money off the table who thought they was gonna get some easy money. And they ain't got no place to run because $12, that means everybody gonna be consolidated right in this area right here in the 12.50 area. You see what I'm saying? Everybody gonna be consolidated in that area because they're figuring if I try to do this one, I can't go no lower because this one ain't worth nothing. That's gonna cause everybody to be right up in here. So so big money gonna come in. What they gonna do is they gonna start selling. They gonna sell this down, and they gonna sell it from 12.94 all the way down through past 12.50. It's gonna make everybody have to take these at at to buy these. That's what they're gonna do. They're gonna cause everybody to have to buy these. And you know what they're gonna do once they have them in their hands? Once all the new retail traders have to buy forced to buy it at 12.50. You know what they're gonna do? They're gonna sell it. They're gonna sell it as soon as they can. As soon as they can, because they don't want to be holding it. Because they're scared that they won't be able to sell because they can't make any money. Because here's the dollar right here. So you know what they're gonna do? They're gonna sell it for cheap. Here's the price right here. You see what I'm saying? Big money is gonna press this shit all the way down, gonna make all of these people scared. They all gonna sell below 12.50, and guess what's gonna happen with the price after they sell? Exactly. Gonna go right back up. Right back up. And what we can do is if we really want to do, we can go do some more homework. We can back up and look at dust to see. Is that possible? Is that possible for it to do that? Well, look at this on November 14th. The open was 14.28. So it's certainly possible for it to fly up higher than that. So this is what they do. And you can see the move right here. I'm going to go back to the line because I just think it's easier for people to see. So you can see the move right here. It's a prime example where the options came in and then people broke. The big money came in and sold it out. Everybody got down here, started selling. Big money took all of their stuff for cheap. And as big money was buying all of their stuff up, the price went right on back up and went higher than the last price. Higher than the last price. You see what I'm saying? Doing higher highs. So be aware of that. So that's why I say when you're looking at your options, be aware. Because if you see that the next option is not really no money, then the best thing you could probably do, if you're going to get into this position right here and sell this put for 12.50, what you're going to do is you got to be anticipating you might end up having to hold it so that it can pop up to $13 and then get rid of it at 13. And what you can do, you're going to turn around, you're going to sell a call at 13 and you're going to get the money. And if it gets to 13, not only do you get this money right here, let's just say if it was today, you sell at 13, you already have the shares, you got them at 12.50. Now you turn around and you sell a call to get rid of the shares, and they pay you $28 to get rid of it at $13. So now you made the difference between the 12.50 and the 13, which is $50. Plus you made your $13 that you when you sold the put, and plus you're making $28. So it's plus 28 plus 13 is 11, 7, 8, 8, 9. Just in fees, just in money that you're getting is almost $100 by itself. So so when you finally get rid of it at 13 and you back with nothing, you walked away with that whole thing with $100. And if you can do that in the next day or two, hey. So I might even entertain this one. I might sell this put 13 at 12.50. That 13 ain't really no money, but you know, I actually really like a day I actually really like a daily one on that one if I can. If I'm gonna do that for 12.50, I just think that I could go and though I really just think I can go to a SPY or a QQQ and do that instead instead of that. You know what I mean? Um, I could look at QQQ and and because see, I'm gonna have to put $1,250 on the line for that. So I'd rather do a spread for the chance of making what, $13? You know, I'd rather do a spread. I mean, and do this on a daily instead of wait for that potential for that money to come in. So with QQQ, we know that they're gonna expire every day. So let's see, November 20th, and then technically this would be November 21st, which is tomorrow, you guys' time. So if I want to sell a put, I like to go down to 85%, sell a put, then I'll buy one back right there. That's a put credit spread. Wait for it to catch up. That's a 12. See, there's my $12 right there. Let's see what I'm risking. See, I'm only risking I'm only risking $87, whereas the other thing I was risking, I put $1,200 on the line. And so the only difference is what? It's not even no difference. I get paid straight up front, $13, the same way I did from the last. See the difference between that, but doing a put credit spread and just doing an all out, putting all your money on the line, like $1,200 on the line. On this, I only got to put a maximum of $100 on the line. You know, because you see the max loss is $87. I mean, yeah, $87. So what I'll do is turn around. Let's look at it. So, so what's going on here? Um, sell a put. So if I sell a put, ooh, oh, okay, yeah. Where's that put at? What did I sell it at? 85%, 86%, 85, 80, something like that. Yeah, 85 right here. And then I bought it back right underneath there. Boom. That's about $12, something like that. Yeah. And then let's press play. Let's get our money. This is what I'm saying. Like you could do this every day. You could do collateral. You can see where my collateral is at. I told you just got to put up $100 to make $12. This expiring tomorrow. So just like I said, if you do this every day on open days of the market, you got 20 days out of the month, 25 days out of the month. I would say just to be on the even keel, because some days you might not take no trades. Let's just say you did that 20 times a month. That's $200. That's more than $200 right there. So, oh shoot, I thought I had already put that on. I was talking too much. It might have got away from me. See, it's not feeling. Might have got away from me. I wanted at 13 anyway. Let's see. It might have went down. Yeah, it went down to 11. But I'm really not caring. What I'm going to do is I'm going to set to that point 13 because I believe it'll touch it again before the end of the day. So that's that. I just put that in place. And let's keep on going. We're not done. We just let's look for our next one. That one's already in place. It's not filled yet. It's just pending. It's just pending. So when it fills, then we get it. You know, if it goes up to that price. Okay. What's the next thing you want to mess with? Let's look at some of the big movers and shakers, like Amazon. Sometimes this is sometimes that cheap stock shit will have you at a loss. But and I'm gonna let you guys go because this is pretty much running over the time limit. But I just wanted you guys to see that that's how you do, that's how you make a close on a call on SPY to make you a little 30, 40, $50 for the day, and then turn around and put on a put credit spread to make another $10. So this is what I'm saying, this is how you turn a regular old day into a 25, 30, 40, 50, depending on your trade account, your risk tolerance. And then that's the key. Just, you see I'm doing 85% probabilities. I'm waiting till everything is lining up to where it has a good chance for me to make money. And I'm getting out early. And so people say, well, you don't let it ride long enough. I don't let it ride any longer than I need to let it ride. And that's why I'm still in the game, going on 6.5 years now. So, it may not be a huge account, but look, I came from nothing. You know what I mean? And I live off my account, unlike other people. I live off my account in foreign countries. So, you call it how you want to call it. This Mr. Cosmic, Cosmic Training Academy. We trade, travel, and we train. I wish y'all all the best, man. I'll catch y'all later. Peace.